How's it going, everyone? Welcome back to another episode of the Investment Hound podcast. This is the 5th episode and is also a special episode. Why? Because we have a guest joining us today. And that guest is Paddy, or my granddad. It's an older twin brother. And Bill lives by the name of William Stronge, or as I call him, Bill. And he lives in Boca Raton in Florida. So a quick little background about Bill. So Bill has a bachelor's degree in economics from UCD, which he got in 1964. Then he went and got his PhD in economics from Iowa State University in 1971. Then became a professor of economics in Florida Atlantic University from 1971 until 2006. And then was a professor of, just remind me how to say this again, Bill, Professor Emeritus, which means retired but still active in the field. And that was from 2006 until the present day. And Bill has also featured on Good Morning America and also many local Florida TV and radio stations, giving his opinion on the economy, as he's a real economist on the Investment Hound podcast. Also, Bill is an economics consultant as well, and his current largest consulting client is the Winter Equestrian Festival near Boca Raton in Florida. Also, just to add to this lengthy CV of his, Bill has also wrote a book called The Sunshine Economy, An Economic History of Florida Since the Civil War. And we'll just read the blurb quickly in the background. So, The Sunshine Economy traces the development of industry in Florida and describes how the state progressed from being one of the least populated in the country, with an economy based on forestry, products, and open-range cattle farming, to the 4th most populous, with an economy based on sunshine, tourism, retirement, citrus, and agriculture. So, depending on where you're listening to this podcast, whether it's YouTube or Spotify, the link to that book will be in the description if you want to go and grab yourself a copy. So, Bill, you're very welcome to the Investment Hound podcast.
Thank you. So,
being essentially, as I said to you earlier today, an expert in economics, an economist, economics can be quite a daunting subject for us beginner investors. So, let's look at how does the economy affect the stock market? How does it drive the stock market?
Yeah, it doesn't actually drive the stock market. It's just one of many factors that drive the stock market. And I can give you some examples of some other factors, which when I tell you of them, you will say, well, of course, that must have something to do with the share price. One is the quality of management. And I'm going to talk about that a little in more depth because I have 2 shares. I didn't really prepare for this podcast when I was coming home from the States.
Yeah.
So I don't have a copy of my portfolio,
okay.
But I can remember 2 shares. Okay. I can remember a share that did spectacularly well. And then I ended up selling it because it collapsed. And then, and I'm a very patient shareholder, so I don't drop at the minute it disappoints me. And that share is a well-known company. It's called Boeing. Let's start with Boeing. Boeing, I must have bought for $40 to $50 a share, and it went to over $400 a share. So it was a spectacular success.
Yeah.
And then there were a couple of plane crashes not too long ago.
Yeah.
Okay. And the plane crashes occurred in one was in India and one was in Africa and one was in the Middle East. And there were no crashes reported for Western Europe or for the United States. So I think the Boeing management kind of said, well, if there was a problem of ours, surely we'd have, there's a lot more flying going on in the United States and Europe. So surely we would have had a crash there. The fact that we didn't have a crash there means that probably they didn't do a very good job of training their pilots in the countries where they did have the crashes. But when the second crash occurred, they got nervous and they took a look and they found that this computer software that was running the plane, had a bug in it.
Oh, no.
And it's possible that the pilots in Europe, in the United States, were somewhat better trained, but the error was not due to a pilot error. It was due to software error, and so then it went down to $350, $250, $150, and I think I sold it at $100 or whatever. So it was, and one of my stars disappeared from my portfolio.
Well, you still made a profit on it.
Well, I did, but nothing like what I had. On the other hand, Microsoft, which was a famous company, when I started, one of the most famous technology companies of the day, and I bought that again for $40 or $50, and I think it's like at $450 now or something. I can't remember, but it's way up there. So it's been a kind of spectacular success. The difference between the two was that Microsoft had first-class management. Not all the time over the last 40 years, but in recent years it's had really good managers. And they moved to the cloud, the computer cloud. And they were, one of the early adopters of the cloud. And that is the future of computing now. Yeah. So there was an example where the management was of very high quality. And you get rewarded for that, particularly if you're in a kind of a growth mode, and Boeing was unfortunately had a poor management. Okay. And the management needs to be changed there.
So economic factors are only one part of what drives
That's
stocks.
Right. Another one is some new technology comes, like artificial intelligence, and all sorts of firms that don't appear to be in the technology industry, nevertheless are going to be using artificial intelligence. And the managements of companies where artificial intelligence will be helpful need to make the transition to using artificial intelligence. And you'll have some good managements and some bad managements there. A third is just climate change. And for example, the energy industry, we tend to produce energy using fossil fuels or using renewable energy sources. And there's an inevitable transition going on because we are destroying our environment by using fossil fuels. So first the coal plants will be shut down in most places, and then the oil plants will be shut down, and then the natural gas plants will be the third one, fossil fuel that's shut down. And in the meantime, you'll be opening new solar energy, wind energy, wave energy, water kind of energy. And so there's going to be a transition there. And that's a case, again, where you have to allow, you have to hope that the management of the companies that you've invested in will make that transition successfully. And then the last one are expectations. What people have these kind of moods, and sometimes they're optimistic, sometimes they're pessimistic. And right now, for example, there's a lot of concern about when will the Federal Reserve begin to cut the rate of interest, and people are kind of betting on that one way or the other. So those are moving the market also.
Okay, that's very interesting. So you think it's the Federal Reserve, of course, cutting interest rates or raising interest rates as well. You think it's the quality of the management within the companies itself.
Yes.
And the third is climate change.
And technology.
And the technology.
and technology change, and there's other things. There's geopolitical risk, the war in Ukraine, that kind of stuff that can drive the market. And so it's not just whether the economy is going up or going down. It is, how. I think management is a very important indicator.
Okay, that's very interesting. So let's move on to the next question, Bill.
Right.
So having lived in America, I was going to say being from America, but really you're from Ireland, but being...
Right, but I've been 60 years living in America this year.
Yeah. So in November, obviously there's a very, very big general election happening in America between Kamala Harris and Donald Trump. So over the next 6 months, how do you see the economy? Where do you see it going?
Well, I don't think that it's easy to predict the economy over any 6 month period. You can predict the economy over a 2-year period, but 6 months is too short a period to try and forecast. And so economists will normally do a 2-year forecast, and then they'll tell a story about what's happening over that 2-year period, but you won't know which event will occur, when. And Donald Trump, of course, is the one who, until recently, was ahead in the polls. Okay, and when I begin to discuss political candidates and political parties, I try my best to be as objective as I can because I have students in my classes.
That's good.
And I don't want to say, you guys are dummies over there on that side, and these are all the good people. I mean, that now I'm sowing divisiveness in the class. So I will say, now, if you are conservative in your orientation, you're probably backing Donald Trump. And if you're liberal in your orientation, you're probably backing Kamala Harris. And here's why and then the economists will split along these lines. And I'll say, here's why the economic conservatives are willing to back Trump and dislike the liberal economists, and vice versa. So I try to be, but Donald Trump is a difficult character, because when you want to find out what it is he's going to do, he's famous for having a kind of a weak connection to truth. And so you have to say, well, if he does what he says he's going to do, this will happen. But he may not do what he says he's going to do. And there's one policy that he's pushing that virtually every American economist who's thinking objectively about the election disapproves of. Donald Trump does not believe in free trade. Now, free trade was economics was founded by Adam Smith in the 18th century. And free trade was kind of brought in by about 1830 or 1840 in England. And it's been settled since that date. But Donald Trump, the Americans abandoned free trade in the 1930s, and they had something called the America First policy, which is, the first thing America has to do is to take care of its own people. And so they put huge tariffs on foreign imports. And it didn't go well. We had the Great Depression. And there are some people who believe that the severity of the Great Depression occurred because of these so-called Smoot-Hawley tariffs that were put in place in 1930.
Oh, very interesting.
And Donald Trump has gone back and adopted Smoot-Hawley type. He's proposing to tax not just imports from China, if you know what I mean, but imports from every foreign country. And economists in general, they're free traders.
So they're fearful that it could replicate what happened at the Great Depression, is it?
That it could. It definitely will create a severe recession. Okay, and it's inflationary as well as recessionary. So you'll get.
It definitely will create a recession if that happens.
It'll definitely create. And Donald Trump does not believe that if you put, if you put a tariff or a tax on imports, that drives up the price of imports. He thinks that Americans will abandon buying those goods then. Okay.
Wow.
And they won't. So Americans will pay probably a half of the increased tax that he puts on there. And that means Americans will have less money to pay for other things that America produces. So the parts that become unfavored in the economy will go out of business, and there's where you get the recession from.
Wow.
And
sorry, just on that, Bill. So the things that he's trying to tax are like, I know I saw one in the news, which was the Chinese cars, BYD, stuff like that.
Yes. No, but he wants to tax anything that's brought into the country from outside.
Wow.
And the other downside to doing that kind of policy is that other countries will retaliate against it. So if he taxes China will put taxes on U.S. imports, and you get reciprocity. And so what happened in the 1930s was world trade spiraled downward as all the countries were putting on taxes. Okay, so economists don't like that. Okay. There's technical budgetary reasons that you're not allowed to impose a tax for more than 10 years at a time. So Donald Trump's taxes that he passed when he was in his first term are all going to expire automatically. Okay. And, they'll only stay around if he can get Congress to agree to reauthorize them. And there will be tinkering back and forth, okay? But the taxes benefit, the tax cuts benefited corporations. The U.S. had a much higher corporate tax rate than other countries, okay?
Yeah.
Although there's all sorts of exemptions and so on, so the actual effective tax rate was not as high as the official tax rate.
I didn't know
that. But it was still higher than most other countries, and so they cut that dramatically. They also cut the tax rate for the wealthiest individuals. Okay, now I told you that Donald Trump may not do what he says he's going to do. Donald Trump is a wealthy individual, so he personally benefits from those tax cuts. Yeah. So I think if I was a betting man, I would say he'll seek to do those because he himself will benefit from it. And
so
that's a nasty thing to say about him, but
I was going to say
that tends to be his behavior.
Well, I was going to say, based off what you're saying, it doesn't sound like you're going to vote for Donald Trump.
Well, I'm crossing the line a little bit, but it's because he tells lies that wasn't really economics, But the Democrats may vote to renew most of them because, you never lose votes by cutting someone's taxes. If you cut someone's taxes, he may have to extend the tax cuts to benefit more people or something like that. And so the Democrats would be interested in doing that, but they're not going to take tax cutting off the table, because that would hand a gift to the Republicans, you see.
So do you think a Trump presidency is dangerous for the American economy?
Well, the tariffs would be a serious matter.
What about, I don't know how you say it in economics terms, like internal policy?
You mean infrastructure and things like that, roads and bridges?
No, like as in what about his policy for, like, stimulating American economy? Surely the economy. Surely, if he's going to put a lot of tariffs on, he would want to counterattack that.
Yeah, okay, that's called fiscal policy, budgetary policy. And if he was going to put a lot of taxes on, he'd want to be cutting some taxes elsewhere. Now, however, this renewal of the taxes is taking existing taxes and renewing them rather than cutting them for the first, he'll do enormous damage with taxing all imports. Wow. And it's just because he doesn't believe that the consumer will be affected. He thinks that if you put a tax on Chinese products, the tax is paid by China, not by Americans. Okay. So if a very efficient electric car comes in from China, okay, and he puts a tax on it, he thinks that there will be no cars brought in from China, from that car. But Americans will say, that's the best electric car, and I want an electric car. Therefore, so they will continue to buy it, and then that'll be inflationary, and so you'll have both an inflation and a recession at the same time.
Sounds like it also might be damaging for their relationship between America and China.
Oh yes, I mean it just.
Even though he's adamant that it won't, and that he's going to fix the war in Ukraine, and he's going to stop the pending wars in the Middle East. Yeah,
but he hasn't put forth any plan to. Yeah, America first would say, Ukraine is Europe's problem. It's not the United States' problem, and we have to help our own people rather than help other people.
In contrast to what you have said, Bill, is there anything about Donald Trump's policies that you like?
Well, here's the way I would express that. Why do, for example, does business like to economic conservative policies? Okay, and obviously one is that the corporate tax rate will be renewed, under Trump probably, the lower corporate tax rate. But the other is that economic conservatives always favor deregulation of the economy. And Trump did quite a bit of deregulating when he was president the last time round. So business will be lining up to support his political campaign because they will be looking for more deregulation. And I mean, old regulations have to be revised over time. And so there is probably some scope for deregulation. But I mean, do you really want to be eating food where there's no governmental regulation to make sure that the food is not contaminated, and
absolutely not,
and for your job there's no regulations on safety being provided for you while you're on your job?
Yeah, but this makes it. But the benefit of that for businesses is that makes it easier for them to maneuver and make new products and ultimately make more money.
That's right. That's right. And so they favor that. Okay.
So that's ironic that he wants to tax the imports into America, okay, to look after the American consumer, but then he also is looking at deregulating America as well. That's right. Which would actually harm the consumer. Which could harm the consumer.
Could harm the consumer. And so I'm being careful here. I'm trying to point to something. Yeah. Why do some people support him?
Sure.
Who are perfectly reputable economists.
Yeah.
And the answer is because they're working for businesses, and the businesses want to have more freedom to do what they need to do. But they probably would favor, renewing the tax cuts, provided it wasn't just for the creme de la creme, but was extended further down to the middle class.
Yeah.
You know?
Do you know what you might find interesting, Bill, okay, is people my age get a lot of their information from social media and these type of outlets and influencers and stuff like that, okay? And on my social media, I do see a fair bit about the divide and the split in America in relation to Democrats and Republicans.
Yes.
However, a lot of people my age favor Donald Trump because Donald Trump is going out and he's doing a lot of PR campaigns where he's appearing in influencers, you know, YouTube videos, their
Yes.
Twitch streamings and stuff like that. But they never talk about fiscal policy or anything like that.
Right.
What they talk about is the near assassination attempt and how he stood up and put his hand up, or they talk about how Joe Biden is terrible and Kamala Harris doesn't know whether she's black or Indian. And they talk about these kind of things that seem more like people are voting for the parties based on what the person looks like and what they do rather than what their policies are.
There are people who are angry at the system. I always ask myself, because when I was at UCD, I took a course on German history in the 1920s. Okay. And that was the era of the Weimar Republic.
Okay.
And I thought that was a reasonable government, just studying it, you know, as a student. Okay. But it was replaced by Adolf Hitler. And I just said, you know, what happened to the Germans that they swung from having parliamentary government to a monster? Okay, because I know lots of Germans who have who live in America, okay, who have come from America, first generation, and I like them all. I really kind of like the German people, okay, and you know, how could these nice people that I know, you know, vote for a monster like Hitler? And the answer is there was a lot of anger. The Germans had lost World War I, okay? And they really felt that they should have won World War I, okay? And you know, then there was a big inflation because the Allies, particularly the French, led by the French, they wanted to get compensation for all the damage that had been done to their roads and their bridges and so on by the war, which they felt that the Germans should now pay to repair the bridges and roads and, you know, the damaged buildings and so on and so forth. And how did the Germans try to take care of that problem? They printed money, lots and lots and lots of money, and the value of the currency collapsed. So then that meant people who were on pensions and things like that, their pensions were basically wiped out. So there was a whole lot of people who were very angry at the system. And they saw Adolf Hitler as coming in and going to smash the system. You know, so they voted for him out of anger. And you have a certain amount of that. You have people who have lost, you know, the Americans used to sell most of the cars in the world. But the companies decided that it was cheaper to build the cars in other countries rather than in the United States, which had high wages. I mean, you know, the benefit of developing your economy is that the wages in your economy go up. And people are better off. And then the next thing, somebody discovers that that wages are lower in Vietnam. So they move a factory to Vietnam that used to be in Michigan or whatever. And the people who have lost their jobs as a result of that change are angry. And they vote for somebody who's promising to come in and smash the system in some way. You know what I mean?
Yeah. It's like what Grandad said to me before. Grandad said to me, people vote in elections, or how did he phrase this now? He said, people vote for, not for who they want, but for who they don't want in there.
Yeah. They make their decision to who they don't want to be running the country rather than who do. And not everybody is like that, but there was a sufficient, it was a huge critical time for Germany in the 1920s when they went from being the most powerful country in Europe to a relatively poor country in Europe because of reparations that were put on them and because of the loss of their currency and so on and so forth. So they were angry. And so similarly, people who were displaced from their jobs in America and felt it had happened unfairly blamed the Democrats.
Okay. Very interesting.
Yeah.
Okay, Will. I think we're going to end it there.
Okay.
Thank you so much for coming on the podcast. It was really enjoyable to hear Grandad's twin, Grandad's other half, who lives on the other half of the world, the other side of the world, give his opinion on economics and the stock market and how he approached the stock market. So hopefully you, the listener at home, you've got some valuable information from this podcast, or even it just has provoked thought in you, which will help shape your investment decisions. That's really what the goal of this is. You know, we get a lot of messages of people asking for financial advice, but really we can't give financial advice. And that's not what the goal of this is. The goal of this is to provoke thought and to give you ideas to go out and make your own realistic, sensible investments. But thank you very much, Bill. It was a very enjoyable podcast.